Hello, everyone, and welcome to another episode of The New Norm. I'm Selena Hill. Today, I have the pleasure to speak with investment expert Ian Dunlap, who is the founder of Red Panda Academy, where he teaches students his blueprint, and the students usually have little to no experience in trading. Thank you so much for being here with me today.
Thank you so much. I'm happy to be here. I'm truly honored.
So let's just get right into it. The effects of COVID-19 have been catastrophic on the economy, but based on your expertise and your experience, tell us, what do you think these effects, how they will affect people personally when it comes to their finances? And also, what do you foresee happening to the economy, let's say, for the rest of the year?
Unfortunately, for those of us that have not been prepared, COVID was a wake-up call for all of us that we need to do better with our finances. Now, I want us to have fun. I want us to party. I want us to turn up. But I want us to know what stocks we should be investing in, as well as we would know any Beyonce, Future, or Drake album, right? So my initiative is I want us to be educated, have fun. But when these crises happen, not only are they devastating, but if you are prepared, it can be the opportunity of a lifetime. For a long time, people wanted to be able to invest in the recession again that happened in 2008 and 2007. And then when it presented itself in February and March, everyone panicked. But that's because I think as a community, we don't talk about investing in money enough together. So it seems like some boogeyman that's in a closet that's out to get us. Well, if we prepare, have these conversations in public, I think it can be a lot easier to have and a lot easier to be able to digest.
So Ian, I take it you're saying now is a good time to invest in the stock market, especially if you haven't already been invested.
Yes, if you're a beginner, the key is if you don't have a big bag of money sitting around that your uncle left you or that your grandma left you, right? If you don't have $200,000 just sitting randomly, you should invest every month. So regardless if the market is going up, going down, going sideways, because there's a lot of discussions on if we're going to have a V recovery or if we're going to have a W. The most important thing is investing has to be the first bill that we pay. Because let's be honest, if we pay Verizon every month, if we say, hey, I'm in trouble, can you give me a credit or send me some money? They're going to say no. If you invest in the market every single month, you'll have some money there for you to be able to help you, your family, your relatives that all needed help during these trying times.
Now, what steps would you recommend for first-time investors?
Number one, there's a great book that I always recommend because, everyone is like, I don't know what to invest in. I've never been taught this. So there's a book called Money Master the Game. So basically, Tony Robbins sat down, talked with the top investors in the country, and they distilled their wisdom into one book. It's thick, so I got to be honest with you, but it's the best and probably only book that you need. Number two, you need to download an app, either Robinhood or TD Ameritrade, because that will be your brokerage. So a brokerage is like a checking account where you can buy stocks. That's all it is. I know it seems very complicated at first, but start with Robinhood or TD Ameritrade. And then after that, you need to focus on buying quality companies. So like Apple, Microsoft, two companies that we all know and love. And then I recommend an index fund. An index fund is just an all-star team. So if you are playing, shout out to all my fellas that play 2K. If you're not a good GM, one easy way to get a win is just like, let me just get the best players and put them all on one team. When you get an all-star team or an index fund, that's what you're doing in the market. You're getting all the best companies, putting them together in one basket, and then you're letting those gains work for you. So you don't have to be Warren Buffett. You don't have to be like the greatest investor of all time. You can just invest in those three, and then you'll be fine.
Now, Ian, I know you mentioned Robinhood and some other apps for first-time investors. How do those two in particular compare to Acorns? I hear less talk about Acorns, the app. Is there a big difference between them?
Huge difference. I think Acorn is a good place to begin. I believe they round up the money. So if you make a purchase, they'll round it up. But with Robinhood, you can, it's great for a beginner. So if you've never invested before, I always say if you can send a text, you can use Robinhood. TD Ameritrade is a little bit more complicated, so it's a little bit more advanced. So for our advanced viewers and listeners, they'll be comfortable with TD Ameritrade. But if you're just starting out, this is your first day, Robinhood would be a good place. And Acorn isn't bad. It's just a place that I don't want you to be forever because I want you to own whole shares of a company. So when you're investing in the market, all you're doing is tying your money to the best companies in the world and letting the best investors on the planet work for you. So Acorn is good, but I want you to graduate to Robinhood, and then after that, go to TD Ameritrade.
I read that with your Red Panda Academy program, you're teaching students, it's basically like a crash course in all things stocks.
Yes.
And you've basically been able to teach them what it took you years to grasp in a period of, what, a few weeks?
Yeah, normally it takes to know pretty much everything you need to know. It takes about 6 to 12 months. Now, of course, I've put the disclaimer out there. Investing has considerable risk. Please talk to your financial advisor. Please be smart about how you manage your money. Go talk to someone first. But the thing that I know that happens a lot in our community, everyone makes it so complicated. So it shouldn't take 45 minutes for me to explain why Apple is a good company, right? I think I have one, right? It's my beautiful baby right there. Hey, Xander, I love you. Everyone knows what an iPhone is. Everyone is familiar with the App Store. But I think because we start having these conversations so late, and I've always said it's a shame that we start our kids playing off sports at 3 and 4 years old, but we wait till we're 25 or 26 to begin having conversations about money with each other. I think that's a travesty. So the most important thing is I try to distill everything that I learned over these past 10 years and break them down into easy lessons that we can relate to and we can understand. And that's been my entire mission. And 99% of the information that I learn, I give out absolutely for free and on amazing platforms like here with you.
Can you share what some of those lessons or tips are that you're teaching the students?
First, you have to invest for the long term. I know everyone wants to get rich from trading, and we always hop on Instagram and we see some guy in a rented Lamborghini in a rented house talking about how much money he made from trading. But the real wealth is going to be in long-term investing. So even if you look at Apple for the last 10 years, even with the Corona crash, Apple is averaging 1,200% return over a 10-year period. Now, I don't know about you, but I would have wished that I would have been in it 10 years ago. So the reason I pushed so hard to share this information, because in 07 and 08, no one was screaming this information to me or our community. So that is tip number one. Tip number two, I would invest every single month. Yes, some months are going to be scarier than others. Trust me, in 10 or 15 years, and honestly, how much different would life have been for all of us and all of our friends if our grandmothers, grandparents, aunts, and uncles knew to invest back in the 80s and 90s? Our lives would be dramatically different. So the fact that we're starting so late in 2020, I think there's been a great push for us to have more financial freedom, but I wish we would have got started in the 80s and 90s. So invest every single month. And third, and most importantly, once you have some information that is working for you, please share it. Share with all your girlfriends. I know we're tired of being in the house, but when we get back to having brunch, this has to come up with Beyonce conversations, Meg Thee Stallion conversations, Rihanna. We have to integrate these conversations around money into our cultural norms.
Absolutely. And I know we talked about the economy a little bit earlier, but I do want to just, ask again, can you further elaborate why now is such a good time to get invested into the stock market?
One, because some companies are still at their lows. So even though the market shot up a lot from March, so the market is coming down some, so it's still a good time to get in. Also, when you look back in 10 years, as people did in 08 and 09, you're going to say in 2025, man, I really wish I had invested in 2020. Thirdly, this is the cool part. Once you start investing in a scary time, when the market calms down and the world goes back to normal, it's a lot smoother to invest. So like, I know in driving school, they'll take you on the easiest streets. Now we're right on the freeway, right? So if you can manage to be able to invest during this time, when it's scary as hell, to be honest, when everything calms down in 2 and 3 years and everyone's back to work, COVID cases are rock bottom, people are safe and back outside, it'll be easier than ever to actually invest. So if you start during the hard times, it gets easier as it goes on because you have the experience of one of the worst times in history when you started.
And what sectors or stocks should people be looking into now?
Listen, tech. So Apple, Microsoft, Google, Tesla, we're here on Zoom, right? Like technology runs our lives. So thank God that we're able to stay connected with our family and friends through social media, telecommunications, our phones, right? But imagine if that went away. And let's be very honest, for millennials, if we lose our technology, we will lose it, right? So the biggest sector has always been technology, and then exposure to everything else you can get through index funds. And the most important thing is just to stick with that plan. I know people like to diversify. I think everyone, this is my homework assignment for everyone. Go Google what Warren Buffett says about diversification. I think you'll find it really interesting. But technology rules the world. Apple, Microsoft, Google, Netflix, Tesla. I know people think of Tesla as a car company. It's really a tech company masquerading, and battery company masquerading as a car company. Tech is the way to go.
Definitely. Now, would you suggest people make any changes to their 401ks or the IRAs right now?
If we have another crash, if you're over 55, you probably should talk to your advisor about going ultra conservative. That's the only thing during the crash that I didn't see. Now, if you stay the race, and we saw it happen, because the Fed ended up printing trillions of dollars to slow the economic collapse, which was a great thing for us short term. But if we ever go through this again, and let's say your aunt or uncle is 60 years old, have them go ultra conservative to prevent some of those heavy losses, so they're not losing 15%, 20% of their portfolio. But if you're young, you're younger than 45 years old, weather this storm out. Most crashes take 2 to 3 years to recover. This one took 3 months. The '08 recession took 2 years. Well, you'll be fine if you just stay in the game.
Now, I know you've been investing for, I think you said, over a decade. What are some of the mistakes you've made during that time?
One, deviating from my plan. So here's the thing, especially in our community, when you begin to invest, you're going to have everyone on earth that you know tell you that's not going to work. So it makes you say, man, maybe they are right. Because if you have 60 people in your ear saying this isn't going to work, it starts to creep into your subconscious. But then you have to go back and look at the data and say, okay, great. Maybe they're just uninformed. They mean well, because what they're really saying is, I don't want you to lose all of your money. So that's first and foremost. Secondly, I would invest a significant portion of my money into the market every month. So I would recommend 20% of your yearly income should go into the market. If I could do it all over again before having a child, I probably would have put 50% in.
You said 50%?
Yeah, because because if you look at when we spend on things outwardly to make us seem or give the illusion of having wealth or riches. I'm just speaking to our community. But then the average black family doesn't have $1,100 for an emergency. And I always ask anyone, go text anyone that you know randomly and just say, hey, I need $2,000 a day. Can you get it to me? You will be surprised at the number of no's, or I'll get back to you, that you'll get. Because if we don't have the money, we can't help each other. So the younger you start, the better. And from my 20s to my 30s, me not putting away half of my income probably cost me $400,000 or $500,000 now. That's a huge difference. But here's the big thing. No one in my family told me you should put this amount of money away. It was always save. And saving is great, but you also need your money to grow, because if we can't live off 100% of our income now, how is 10% of that income at 60 or 65 going to pan out? But no one is telling us, hey, you need to start putting this money away. And for my parents, start now. Put money away for your children now, because Apple, Microsoft, Disney, they'll still be around. And then it would be a lot easier to fund their education, give them financial freedom, and then not have to acquire all the debt that we normally do when it comes to going to school, or actually just start working, and then we're starting from behind and having to scrap together to help them start their adult lives. So I would put more money in from the very beginning if I knew what I knew now.
You know, many of us are still adjusting to the new norm, post living in this post-COVID world. I mean, it's still here, the pandemic. What would you say is the silver lining here when it comes to, COVID-19, the fact that many of us were isolated? Do you see anything good that came out of it?
It's a beautiful time for creatives. So because we have all this time, I love the beautiful backdrop that you have, right? We were talking about camera stuff before we got on. Now, those who want to make content, you have nothing but free time to do so. If you want to learn a craft, you have nothing but free time. For those of us in Houston, Atlanta, New York, LA, Arizona, we're locked in the house. So we can't do anything but research, share ideas, talk to each other, and execute. From the market perspective, some companies that we love have went on sale. So you have to think of this drop the same way as you would a Black Friday sale. So like if Louboutin went on sale for 65 or 70%, people going to start going out and getting a few bags of shoes and add to their collection. Same thing. So when these drops happen, I want us to change from the perspective of, oh my God, the market's dropping. What are we going to do? To, okay, great. Some of these companies are on sale. I need to buy quality and I can get them at a cheaper price. And in 3 or 4 years, I'll be incredibly happy that I did so.
Absolutely. And Ian, you know, just as we wrap up, is there any other final pieces of advice that you would give to our audience? And on top of that, how can people get in touch with you and learn about the information and the content that you're putting out?
I give away almost all of my information on social, so you can follow me on Instagram. My tag is The Master Investor. You guys can go to joinredpanda.com. I also have a show with my friends at Earn Your Leisure every Monday called Market Mondays on YouTube, absolutely free, so you guys can tune in to ask questions. What I would say in terms of investing, I know it's scary for our community because we get started so late. But if you read that book and you buy quality, honestly, you only need 4 to 5 stocks. You don't need 30 stocks. Because at that point, you've created your own mutual fund. Buy 4 or 5 good quality companies, hold them for at least 5 years, and the time frame when you really should hold them is 30 years. If you do that, everything will be fine. The issue is with investing, people want to flip very quickly. And then, as you know, in any career, it takes you a certain amount of time to see the kind of growth that you want. Like, how long have you been doing your job?
10 years.
See, and around the 5 or 6 year mark is when you got comfortable. Now you're a master of what you do. A lot of times people could be into a company for 3 months and they want to leave it. And I'm like, but you've been in a bad relationship for 4 years. Like, this company is going to do a lot better than that relationship. So just stick with it. And companies that have been good will continue to be great and grow. So like Tesla, Amazon, everyone's ordering on Prime. Like, Prime boxes have been shipping like crazy through Corona. But Amazon was great 5 or 6 years ago. So just stick with the companies that are tried and true, that do well. Invest every single month. Make that the first bill that you pay. And I promise you, in 5 years, you'll be very happy that you did so.
Thank you so much, Ian. We really appreciate your time today and you sharing your insight and expertise.